Hello, welcome to LR Options. Today we're going to go over swing trading and day trading. After this tutorial, you should be able to know the difference between the two and be able to decide whether you will be specializing in either one or the other or do a combination of both. If you're new to my channel, please consider subscribing and turning on the notification by clicking on the bell. Okay, so let's get started. Day trading involves opening and closing the same trade on the same day. Day traders normally will not hold on to a trade overnight. Many traders choose day trading due to the potential for huge profits in one day. Day traders like to be independent and trade on their own. Let's go to the next slide. Day traders usually trade the market open when the market is at the fastest due to volatility at the open. This is when stocks move the fastest. These types of traders enjoy the rush and excitement of this type of trading. The stock market opens, they wait for the opportunity to get in, and then they jump out as soon as they have a profit. Okay, next slide. Now we're going to speak about swing trading. Swing trading can last from 2 days to several weeks or even months. Swing trading takes days to see your strategy unfold. You don't have to be on the computer throughout the length of the trade like in day trading. With swing trading, you can still keep your full-time job since you don't have to be constantly checking the trade. Swing trading and day trading have pros and cons. Not one strategy is better than the other. It all depends on the trader's personality and whether he or she is better suited for one or the other. Okay, so I'm going to stop here and ask for you to type in the comments whether you feel you would be a day trader or a swing trader. So right now I'm going to play a review of the puts trade video that I did weeks before. So please stay tuned and we're going to review that video. And if you haven't done so already, please subscribe and hit the notification bell. Thank you. Hello, welcome to LR Trades. Today I'm going to show you the secret of put options. By the end of this video tutorial, you should know the right time to enter into a put trade. When you subscribe to my channel, you get to learn the easiest, fastest way to trade. Every week I upload 2 to 3 videos, so click on the subscribe button and hit the notification bell to be notified of my new videos. So, what is a put option? A put option is an option contract giving the owner the right but not the obligation to sell a specified amount of an underlying security at a specified price before the option expires. A put option increases in value as the price of the stock goes lower and lower. A put option loses value as the underlying stock increases. So here is a diagram of a stock. Let's say that the stock is going down from 40 to 30 to $20 in value. If you had entered into a put option trade, your trade will actually be going up in value. And of course, the option buyer of that put can also sell their option at any time. Put options can be in, at, or out of the money. In the money means that the underlying asset price is below the put strike price. Out of the money means the underlying price is below the strike price. At the money means the underlying price and strike price are the same. Okay, so let's stop here for a little bit. Hopefully you've been taking notes, you've got a pen and paper. And let's look at the comments. And I'm going to ask you to please in the comments if you would write how the answer to the question, how does a put option gain value and become profitable? Again, how does a put option gain value and become profitable? Okay, so what happens when the market falls? If you have traded call options, you have most likely lost any premium you paid for your calls, and your calls are worthless. But the secret here is if you traded and bought a put option, which again is a bet that the stock market is going to go down, then you have just profited from the fall and your put is worth money. This is why many traders use put options to protect their portfolios from getting wiped out. So let's look at an example. Let's say that XYZ stock is trading for $40 a share. Let's say you buy 6 puts with a strike price of $40 that are available at a premium price of $5 per share and expire in 1 month. So one put option contract costs $400, which is 100 shares times the $4, which is equal to $400. Okay, so we're going to stop here and we're going to let's go over the answer to the comment that we were supposed to go put in the comment section. The question was comment down below if you know the answer to how does a put option gain value and become profitable. And of course the answer is if the put option's underlying stock moves down, then the put option goes up in value. So the stock, of course, has to move down. So, again, check back for our next video in which we'll go over stock trends and how to identify them. So don't forget to comment, like, share, and subscribe. And let everyone know what we're doing over here at LR Trades. See you next time. Okay, so let's take this time right now to compare the call options we went over in the previous video called Call Options for Beginners. A call option is when you buy an option and expect the stock to go up. A put option is where you buy a put option and expect the stock to go down. If you buy a call option, you have the right to buy shares at the asset strike price until the expiration date. You are not obligated to purchase the underlying shares. You can also just let the option expire worthless without doing anything. Call options make money when the underlying asset rises upwards. A call option has unlimited profit as the stock rises in price. Also, both call and put options can be in and out of the money. When you buy a put option, you profit when the price of the stock falls. Your profit is limited since the lowest the stock can fall is to 0. Okay, so we're going to stop here. If you haven't done so already, please comment below, subscribe, hit the notification bell, share this video, let everyone you know what we're doing over here at LR Options, and thanks for coming by. Bye-bye.